Good morning, everyone. Welcome to Admo Markets. My name is Chris, and I'm going to be the host of today's Forex strategy webinar. Before we start the actual webinar and take a look at price action and the charts, we're specifically going to take a look at the Forex charts, of course. But if you have a request for DAX or something, just let me know. We first of all have to take a look at this disclaimer, explain the fact that this webinar is intended for a global audience and may not be suitable for everyone. Therefore, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more about that. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Good. So today we're going to specifically look at a strategy. First of all, I might want to do a quick sound test. Is it sounding okay? If one of you could confirm that, that would be great. Then we can move on. Good. Thank you for that confirmation. Great, got everything going. So first of all, we're going to take a quick look at the Forex calendar. Then we're going to take a look at which currency pairs could be interesting to trade. And then I'm going to specifically use a strategy that has been already used the last couple of weeks. And I'll use it one more time this week. It's a free strategy available at elitecurrency.com. And it's a way of short-term trading, perhaps scalping even, by using range bars instead of candlesticks and trying to catch smaller movements, anywhere between 25 and 40 pips on average would be the target. So that's what we'll focus on yet again. And then next week, probably something else, I would say. We can still come back to the strategy, a few weeks from now and revisit it one more time. Good. So with no longer ado, let me grab this calendar. We have pound news in hour 40. We got manufacturing production, and we have Bank of England governor speaking. It's 13 hours from now. And we have a New Zealand interest rate. Let's see. The end of my day. So that's about 14 hours. Still a long way to go, but basically next trading day, but at the very start of the next trading day, because it's New Zealand, of course. So still, New Zealand could be something to be cautious of. Maybe at the end of New York, because then it could go into a very quiet kind of setting or mode as it approaches that statement. Something to be aware of. One more thing, by the way, that's the news. If you're interested in looking at analysis, before I look at the charts quickly here, technical analysis you can find as well on the website of Admiral Markets. And just wanted to let you know that you can find technical updates. This is one on euro dollar, pound dollar, Swiss dollar yen. And here's euro pound. And this is Nenet's contribution here. And another technical update. Anytime you see technical update, it's normally multiple pairs. And if you see a chart like this with the MACD, it's normally from Nenet. Let's take a look at the most recent one here, just quickly to get an idea. You can see the analysts, I'm not sure which one at the moment, but let's see. Harish has a resistance and support lines here indicating that wedge that we've been talking about as well. All right, so just wanted to let you know. Let's now move on to the charts. Now, normally I give a technical kind of analysis, a discretionary view on things. but that could take quite a while. That could take 45 minutes or something like that. So I wanted to skip that for the moment, just focus on the strategy, and then when we have time, we'll focus on analysis so that we have a bit more time on the strategy. So we'll focus first on the strategy, just in case that someone is joining here for the very first time, or you are joining specifically for the strategy, then I want to share that with you first of all. I think it's good when using the strategy to focus on a pair that has potential. So to a certain degree, a quick analysis makes sense, just to have a feeling for what pair could be in a good spot. Because this strategy will not work well if there's a big range, or maybe a big range, yes, but small range, medium range, if the consolidation is tight, if price is just going sideways. This particular strategy, which I will show you in a second, fares best when price is having some good momentum and you get a nice pullback and continuation. So we want, preferably to identify a currency pair that has that potential or is showing that potential already. Then the strategy will work the best. It's possible to say, okay, I trade only the strategy on one or two pairs, but you're going to bump into days where the strategy performs less because of the factor that the currency is not moving. I personally like to scan more and then say, okay, this has a good chance, because then I increase my performance. All right. One of the tools I use for seeing which pairs could have some potential today is this relative strength indicator. All right. So let me add it again. I like to refresh it. No, that's the wrong one. Now, any of these tools that you would like or see and you would like to have them, just let me know. Send me an email. Here it is. Also this one, or the strategy, and I will send it to you. So what do you got? This is a 5-minute chart. We're looking at a low time frame to see what kind of movement we have now. Of course, the market just started, so from that point of view, the market is already kind of more in a consolidating mode. That could be also one of the reasons why this particular strategy would fare better to use, or would do better, be more usable a bit later in the day, unfortunately, because of the fact that it is a short-term strategy, and at this moment the market is not so much warmed up typically, unless you're, maybe with the exception of some yen pairs and Aussie pairs, that has everything to do with the fact that dollar, euro, and pound go into kind of some hibernation mode, just like bears do in the winter. They go to sleep. Well, these pairs do that too throughout the Asian session. So that's why typically the market will not be warmed up too much. So that's one actually disadvantage of using this particular strategy at this particular time. Let's see though still if there is any potential. If not, then I'll just explain the strategy and I'll go back to technical analysis. Let's see. We have yen falling but strong, dollar weak, slightly with an angle up. Aussie has some potential, perhaps euro weak, so it looks like the odd maybe, or yen on the stronger side, and at the moment probably euro and dollar the weaker side. Okay, so from that point of view, let's match these then. So that would potentially mean odd USD, that would potentially mean euro odd, euro yen, or dollar yen. I will skip dollar yen for the moment. I'm just going to choose one pair for the moment. Let me quickly take a look at euro yen here. Euro yen could be good. A lot of momentum here. And let me quickly take a look at odd USD. That the opposite of what I was expecting, but one thing though, was looking for a strong 4-hour candle, and I don't consider this a strong 4-hour candle. It's more a doubtful candle. That was the only warning that this was not a good break, but definitely a decent warning. This candle right in here didn't keep the control. Got pretty good momentum to the upside. I would say let me take a look at the Euro Yen, and then I would say the odd USD. Second. Yeah, let's do that. So how to add the strategy. Good. First of all, we open the Euro Yen chart. Then we go to the 1 minute time frame. Then we click on Navigator. We want to click on constant range bars. We want to drag it. We want to make the value 4. Officially, last time I used 2, but let's make 4 now. We want to click on OK. Then we want to go to File, Open Offline. And if this is too fast, no worries. It is explained in a PDF document that is online viewable. So if you want us to get access to that, just send me an email. Okay, then we're looking for Euro dollar. Sorry, Euro yen, excuse me. And we're looking for M2. Let's see. Then we go to right click in the chart, go to template, and click the template. Okay, then we have the Euro yen on. All right. What determines 2 or 4? 2 is even shorter term, basically, and 4 is slower. You will see the bar. It will take more price action to see the bar. It's a bit longer term. If that answers your question, not sure. And we'll definitely take a look at the pound dollar later on, by the way, Jen. Let's see. So we had a good fall here. Now the idea of the strategy is to look for a good trend. Now a good trend, of course, is something of, again, a whole separate topic. But roughly speaking, what we're looking for is the blue to be either below or above the red to show the trend. And then we're looking for the angle of the blue especially to be at a decent angle like this, for instance. That's good. Plus, we're looking for a pullback. So, for instance, here you can see this is a downtrend, the start of the downtrend. That's good. But we didn't get a pullback all the way until here. So that's the moment where we're looking for. Then we're looking for this oscillator here at the bottom to turn red again. So the whole idea is basically a trending mode, a pullback, and then look for the beginning of the continuation. The reasoning is, and with range bars, of course, in this case, the reasoning is that we don't want to kind of predict the reversal, which is here. We don't even want to necessarily predict a breakout or something like that. What we're looking for is a clear trend, then a clear pullback, but we're not even trying to predict where that pullback will stop or turn. No, we're waiting basically for the break, pullback, and only looking for the fact that it starts to turn. And kind of like at the beginning of that turn, that's where the trade is taken. Obviously, There's always some risk involved in any strategy. There's nothing we can do about that. The risk of this strategy is the fact that sometimes you're going to have a good downtrend, you're going to have a pullback, you're going to have what looks like a continuation, but actually it doesn't go too far before you get some bigger type of pullback like this instead of the downside. But considering the fact that we're trading with such a momentum behind us, typically you definitely have a good chance that you get the follow through to the downside. If it takes very long to continue, you might even want to think about trade management. For instance, well, typically, let's take a look here, 732. You know, you don't want to trade this for hours and hours. That would make no sense. I mean, this is definitely a trade that you can open and close within the session. This is, by the way, for those that are wondering, it's not a time frame, it's a range bar. It should be 4 range bar. So now what we see on the chart is not time. It's pure movement of price action. It is each of these boxes, let's say, are not candles. They represent a certain movement. And if price doesn't move out of that range, then you will not see the next box. You will only see the next box when a certain minimum of movement has been made. So once again, back to that example. Let's see. We had to turn around here, so that the entry would be as soon as we see this red, probably around here, the stop loss. Typically, you want to go at least above this top, obviously, but that's in this case, yeah, about 23 pips, so about 20, 25 pips in this case. If it's less, sometimes you get a turnaround, and the stop loss, if you put it above the top, would be only 5 pips. In that case, I prefer to go a bit further away with the stop loss. I prefer to go between 10 and 15, because if you go less than 10, it's just typically a bit too tight. The target is anywhere between 25 and 40 is good. Nothing wrong with it. If there's no fixed level to think about, it depends how much you want to feel comfortable with. You can also aim for fib levels, perhaps. Almost hit the minus 272, for instance, or even trail it. That's really quite flexible. Most of the time, the trade will go pretty fast our way, and typically it will make a run of 20-25, and if one is lucky, get some additional 20 after that. Let's take a look here. Here's a run of 30. Of course, this was an exceptional big run, and then we get another 40 pips. See, so if you live through this consolidation triangle, you get some 20 here, an extra 20 here before it then dies down. Anyhow, at this moment, we are seeing some upside on the euro dollar, slowly but surely, and we do have an uptrend considering the moving averages. The blue is okay as an angle. So as soon as this falls, curves, and starts to be green, I'll take a long. It's pretty much that straightforward, as long as I think that the trend on the euro yen is sufficiently up. Now, the thing is that that's pretty funny, isn't it? Because the euro yen, when we were looking at the chart, had a massive down impulse. So if anything, I expected to go short. But you can see that in the meantime, the whole currency has turned around on this particular template, right? Now, that could be one of the reasons to say, okay, I'll skip this long, obviously, because it is looking at other time frames quite against the momentum. But just because that this is against the momentum doesn't mean that the long necessarily will be a losing trade. It also depends on a higher time frame. So this is something that could be checked beforehand. If a long makes sense, we can do that still. But based on the strategy, that would be the idea. The angle looks good enough to me, as long as this starts to turn up. And here you can see that down momentum that we were seeing. Now, some recent upside examples. Yesterday, for instance, uh, this one is doubtful because the moving averages are intertwined. If someone takes the breakout, it would have worked, but that's a breakout. This is, I would say, sorry, this drawing tool is not working. Okay, well, anyhow, this example here and this one here, those are okay as examples. You'll have the moving average. Be aware of one thing. You'll have the moving average often flat when price makes the retracement. The angle will not always stay at a sharp angle if you get the retracement because of the fact that price is making a retracement. So you get the upside, you get the retracement. In that case, like this, you have an angle here, an okay angle, but here it gets flat. That's something that will happen. So when looking at the retracement, don't look at the angle too seriously. Look at more at the angle when it's rising. That's more important. Because otherwise, it's always going to be a bit flattish. In this case, it's retracing down. So that's a big difference. You see the downside here when it's retracing, whereas here it's more flat. Here it's more flat. So when there's a retracement, flat is actually okay. That's how it should be, typically. If it's opposite of the direction you're looking at, then it's something more to be worried about. Does that make sense? Otherwise, look more at the angle when it's actually making the move. Look also at the price action and the difference between the moving averages, for instance. Look at basically the gap here, or maybe, the gap between here. The more sharper the angle of price action like this, right, the better. This is already a bit more corrective, actually. This is a sharper angle. This is good. This is okay. This is good. 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 Just to give you an idea about maybe a bit of the more discretionary part perhaps of the strategy. Sometimes you're going to have a deeper retracement like that. And in that case, it depends. I mean, if price respects the red one very nicely, here it goes through it a bit. Although I'm not, that's a bit of a discretionary call. It sometimes could be worth it still, although this one is up, because it's just a bit of an ABC correction before continuing. But anyhow, even if it goes back to red, what we first need is a turnaround, like here, right? When we compare that to this one, here it went to red, but let's see. Yeah, we did have a turnaround, but it was actually just part of a bigger correction. That's sometimes could be a loss if one takes the trade there. But considering the divergence, for instance, which is another thing that can always be looked upon to judge if an entry a bounce after hitting red makes sense. Alrighty. Let's see. If we enter a trade and the MACD changes back its color, do we exit? Let's see. You mean this is? I understand. This is well. Then typically you're going to have a very short trade. You could have a very short trade. It's not a. It's an okay method to do. You might, get out here in this case for about break even. Let's see. In this case, it goes for a big run. It's possible to use if you have some doubts about the trade. If you think that the turnaround to the opposite side could be that risk could be present, then that would be a good way to keep the trail very tight. If you want to give a bit more time to that trade, then it will better be not to use it because you could exit too quick. Oh, in the meantime, we had a rise, but the pullback kind of missed the moving average by a bit. It's a rule of thumb to wait for at least a pullback to the blue. If you want, you can certainly do some testing and see how shallower pullbacks would work out. I mean, if you don't mind sharing, then let me know how it went, and I can share it again with others. But that's something that needs to be tested. I have no idea. That could be a bit riskier because you can see that the shallow pullbacks. Yeah, I don't know. Sometimes they'll turn around pretty fast. Look here, you get a small pullback, bit of color follow through, but then it goes back to the blue anyhow. So that will need to be tested. So anyhow, waiting basically now for price to retrace to blue. So what we can do is add. Of course, we don't have to stare at this particular currency pair. What we can do is, or what anyone can do with this strategy, obviously, is make small kind of windows like this for the pairs that are interesting. How many pairs that could be, I don't know. Depends how many you want to monitor, how many you think you can handle. I mean, I think 2 is pretty good to handle, but it really depends on your experience. If you have more experience, it's probably easy to handle 4 even and have here your dollar, here your yen, odd USD, and their pound or whatever, the pairs of interest. The moving averages themselves are 120 is red in this strategy, and the blue is 40. Now, whether euro yen is a good long, I don't know. Let's take a look quickly. Yeah, be careful with indeed the taking the trade. If you have indeed several windows open. Yeah. To me, a long seems it's something that typically I would not do against such a big momentum bar. Probably would rather look for the short. But the funny thing is that it could, let's say, retrace back to the 50 fib, and in that regard, you could see maybe something like this, for instance, and a long maybe in here might even work from that point of view. So it's not a typical trade I would be looking for, but in my own discretionary trading, but who knows? It could be that potential there. In any case, this is an iffy long from a technical point of view, I think personally, because of the big bar to the downside. But I would say that the strategy criteria have been met, so it's possible we can test it. No, I'm not sure why the euro yen is not there. Did you try looking at Forex Plus? There are more currency pairs. Probably did, but just checking. Of course, this particular chasing. Well, what I mean is you go to this plus in the left upper corner, and you don't have this button here. Okay, cool. Try to go with your mouse to that window, and do you see a list like this? Cool. So there should be your yen there. Okay, cool. So yeah, patience a bit. I mean, patience is sometimes required for catching or not catching, but taking the setup when it arrives, especially on these shorter time frames. Probably one of the reasons why I like maybe even an hour and 4 hour more, because I I like looking at the charts at a specific time and not so much like continuous streaming of looking at the charts personally. So yeah, I'm not a big fan from my patience point of view of trading um, like this intensively within the hour. It just doesn't suit my own trading psychology. I don't like to look at charts so much. I like uh, not. Let me say this way: I like working with charts, but I don't like. I get impatient with hunting for a setup like this. That's where I lose a bit of patience. But yeah, let's take a look at some other maybe other. I mean, it could happen any second. That's the reason I was waiting. But perhaps anyhow, Yen is not the most best setup. Let's take a look maybe at quickly at Euro odd. Let me set it up. Now you might wonder why isn't it set up, but the bar strategy here, the slight disadvantage of it is the fact that it has to be added on the chart when you open when you restart the day. Unless I guess you keep the charts open perhaps, but hang on, I'm getting confused. Oh yeah, sorry. Did I do this already? I did, no? Yeah. Okay, well, anyhow. I was looking for, now I remember, sorry, I opened offline. Euro is also showing upside. It didn't hit the blue as yet. Let's take a look at Euro yen. Oh. Okay, so it's showing green finally. So that would be a long then now. It seems to have just moved like 4 pips when I took the long, but and the stop loss would be typically below the bottom. Let's see. Which should be about 139.13-ish. Maybe that's a bit too tight. Go to 11. Okay, so it shot up a bit, as you can see. Just when I was taking it, I wanted to take it around 26, I think. Eventually, it was 31. Stop loss is 20 instead of therefore 15. That's a big difference. It did shoot up and continue in the meantime some 20 pips. 20, anywhere between, yeah, even 20, but 25 to 40 is typically, the move one will get. And you can see this was about a 30 pip move. Now, In my case, I have to be a bit faster next time because if I wanted to take those pips, it would be too late already. But so it is sometimes a fast-moving strategy, as you can see. So, but having a webinar at the same time is not helping my speed, obviously. But if you really want to trade it quickly, you just will have to be indeed watching it, monitoring it quickly, because these bars can kind of how do you say it, print quickly. In any case, this is in my opinion still a good momentum here, like this, and you can see not a bad gap. There is a slight still divergence between here, but I think considering the speed we've had here, some more upside is probably likely. So let me see what could be a good target level again, maybe to put a TP on. Oh, we just hit the 50 fib actually. 139.50. Oh. So let me go to 139.70. That would be the next fib. Trail stops could be used. For instance, in this case, we have a bottom right here now. I think it's a bit on the early side at this moment. But could be used, considering the fact that we hit the 50 fib. Let's test that and use that and go to 25. So now it's only minus 5 pips loss, and stop loss is about at the place where the turnaround happened at the moment. The 5 pips is about 1/4 of the original risk, which is always handy. Keep the losses short, let the winners run. This strategy to let the winners run is it's possible, but many times you often see more 25 to 50 pips than 50 to 100. It's still good to keep an eye if it's possible to get a big one like that, but realize that it will not occur often. It will be not more than 20% of the time. I mean, typically you're going to see 80% of the time, maybe even up to 85, 90% of the time probably, those moves, right? Unless you are able to live through multiple ups and downs like this, then you might be able to catch a bigger move, especially if you're trading yens or pounds or pairs like that have a bit more volatility. Well, scaling in, I would not add personally if it's so close to the current entry. If you take small risks, for instance, I wouldn't rule it out. If you take a quarter, I mean something that's very small for you personally, let's say 1/10%. Normally you trade it with 1% and or 0.5%, and you go down to 1/10, and you try like small little bits along the way, then that could be possible, because then it doesn't matter that the entry is about the same, because you're anyhow risking on the lower side. Letting the winners run, well, basically gauging momentum. It's definitely something that you hear often. You see often in books, you hear on videos. It's a lot more difficult, I agree with you, a lot more difficult to actually implement it. But it definitely means is active trade management. A set and forget strategy is okay. It's possible. You can make profit with it, but you, of course, hand over the potential to optimize it. It's kind of like the advantage is maybe the psychology part, because you have to stick to the rules. The disadvantage is the optimization. I do think that this set and forget is better because you can optimize it more. Just because it's more difficult, though, it doesn't mean that I think it's not the desired option. But it does take a bit more, perhaps, experience and learning. Wow, we got really close here, but still alive. That doesn't look like it's going to last long, but it's still open by a very small margin, but it doesn't look too good at the moment. So anyhow, active trade management is the best way, but how do you do that active trade management? That actually could be a very good webinar topic for Ned and I, perhaps once on Thursdays. What I personally look at is momentum. Best way at the beginning of a trade is to leave the TP open, unless you're trading. If you're trading a scalp or if you're trading a range, you might want to work right away with the TP. It's not always valid for every type of strategy. But if I am trading a strategy that has a trending element in it, and I'm trading with the trend, and I'm trading something that preferably is an intra-week, then leaving the TP open is the first step. Seeing how price responds. Does it move up as expected? How much does it move up? And seeing what kind of resistance levels, for instance, it broke with the uptrend. And then I put a fib on that particular move and look for the next target. Or even the target after that. It really depends on the higher time frames too, what kind of space there is potentially. So that would be actively kind of monitoring it. Euro yen is back to the moving average. As you can see, the euro yen, this is what analysis does help instead of just looking at the strategy, is that what I already said beforehand was the 50 fib, right? So optimally, if I were fast enough, I probably would have entered a bit lower and would have put the TP at 139.50 and would have taken those 25 pips, to be honest. Now I'm hanging in there with a -5 trail, but that does happen. Obviously, sometimes you can't implement everything as perfect as you wish. Let's see, maybe it still makes that push. Let me take a look and open the AUD/USD in the meantime. Regarding the active trade management, by the way, Ketan, that does require also, some a bit more perhaps testing and experience, especially before that, something like that becomes a bit more manageable, perhaps. All right, this is the odd USD. It's a pity I didn't go to the odd USD. That had a bit better example, unfortunately. Just, I guess, 15 minutes ago, when I was looking at the euro yen, the odd USD was second on my list. And the buy would have been somewhere in this consolidation. It depends exactly how much it moves at that point. It probably about 77.28. It's up about 20 pips at the moment. But now it's too late because it has moved away already, right? A long could have been here too, by the way. But as I said, if one thing about this long that is not so good, and I'll explain why, is that you see the entry about here in this consolidation, and you see where the bottom is here. The difference is about 5 to 6 pips. This, when it's this tight, the stop loss, when you use the recent bottom, those tend to be a bit more doubtful. I'm not saying that they're always bad, but they do have a bit of that problem. In this case, the reason is that you basically get this consolidation, and we didn't really bounce too much. So it's kind of like a flat kind of correction, like this. So if you don't get a good bounce, you will have a tight stop loss, but then you'll have this risk. Well, anyhow, even if a loss is taken here, then those things happen. Let's go back to the euro yen. Got a bit more movement again, but double top of 139.50. Was even doubting. I did think about 139.50, but okay. I'd still rather maybe aim for a bit more R2R, but if it takes too long here, I might even use this bottom. It's not a bottom as yet, though. Let's see. A bounce off 120 is not tradable. I'm not sure what chart is that, Ketan? Sorry, indeed the chart hasn't frozen, and I'm not sure if yours is freezing, what the difference could be. Let me otherwise send it again. Your yen is at 139.40 at the moment. Well, 120, I'm not sure what you mean with 120. Yeah, there's no chart with 120 at the moment. 120, not that I know of. Maybe your odd is something like 1 dots. Not the ones we've been looking at now. The odd USD is around 0.77. Your odd is about 146. Your yen is about 139. But if you know which one, let me know, of course. And I will send a reminder to send you the template. Now it's getting a bit weak, to be honest. This is already triple divergence or something like that. It's looking more like a double top, and I think it doesn't. It still has a decent space between these moving averages, yes. But in my opinion, my patience is running a bit out. So I would almost just take a break even, personally. Ah, 5 pips is not bad either, but so I put it at break even. there's, I think, no other setup. We can look at the year end later how it developed. Now it's either break even or plus 40. I'll just leave it at that. Nothing else to do. No management left. Well, I could lock in some plus 20 perhaps. But that's about it. So we can look later on. Let me take a look. Let's see. We got some requests for DAX, S&P, Dow, and pound dollar. I remember. So let's first start with the euro and pound. Take a look at some analysis. Yeah, no less than 15, Indy. Hopefully 40. But probably not, to be honest. Let's see. Euro and pound dollar. Euro dollar and pound dollar. Sorry. Euro dollar did get a bounce yesterday. We're talking about the fact that it could retrace like this, and that it could make an intraday zigzag back down to support eventually. Let me get rid of this, everything. Basically, that's what indeed happened. And price made the pullback to 61.8. Indeed, kind of felt shoppily, then broke this trend line. Although then it went to sleep, and now it keeps pushing a bit after some choppiness. So that's what happened yesterday. From this point of view, to me, it looks in like a bullish breakout at the moment, and I would say it's an intraday potential for upside today. So let me add the Camarilla then in that case. Hook back to H3. Let me take a look at the 5-minute chart. Let this AO, I would say, go back to the zero line, just like yesterday. In fact, here go back to the zero line. And then try to find the short. Finding the short could be below these fractals. Could be a big bar like this. Could be 3 red bars, perhaps even 1, 2, 3. That's this one. That's actually here, 3 red bars. Right here. Then it's a turnaround. So those are potential entries after it's gone to the zero line. And you got an intraday downside. Yes, the entry is based on a 5-minute chart, but the analysis, of course, is from a higher time frame. But the timing is done on, or in intraday time frames, I like to use this as a timing tool. So that example, but then the other way around, could be used, or even the strategy to find this particular moment. So we know that the area of interest, let's say, is 113.20, 113.15, 113.25. And we could wait with the strategy for that price level to be hit, after which to wait for the turnaround, either with the AO or with that strategy. That, I think, personally is what I'll be doing. Pound has the news event, but it too, kind of the same scenario yesterday, just very quickly. We saw this fall, so we said there is a chance of an intraday zigzag before finding support. Although this was a pretty sizable consolidation and frustration, perhaps, finally the dip came and the rise. And if one waited for the 5-minute technique here too, there was a third green bar about here that was just a tad early, because there was a slight break here, but only by a half a pip or so. The other method, am I looking at the right day? No, sorry. I was already wondering. That doesn't add up. It would have been just as valid though, by the way, on the 8th, but this is a different day. Here, sorry. The third green bar is this one, along right here, or my 5 to 6 candle rule, not breaking the bottom, 2, 4, 6, about the same spot right here. All right. Anyhow, we got the bounce and now breaking through that trend line. So here too, an intraday upside, I would say. And it seems like we're indeed breaking through this resistance line and bouncing off support here, here, and here. So it's kind of like this. We're building on this this upside and now getting the break. So there's intraday potential up to 155, for instance. Jen was looking for a hook back down to here. That unfortunately didn't happen. It was definitely possible that it could have fallen like this and risen again, simply because of the fact that although it was building a base, one could also consider that to have been maybe a bear flag potentially. And we, as I wrote in today's wave analysis, need a break above it really to get in confirmation. And we are getting that break. So although a move, it was realistic to expect a move down to here from here, it didn't happen, and we're breaking instead to the upside. So therefore, this we can forget for the moment, and therefore we need to look, I will be looking for smaller pullbacks to the upside, like a retracement back to this target, for instance, but more importantly, probably will have to be, let's see, let me take a look at the hourly. Maybe even just looking at this hourly candle and waiting for a halfway retracement. Or 38.2 perhaps, it's more realistic. With a stop loss below this hourly candle and trying to ride it up to 155, I think. Let me check that. Here too, we're above the H3, so looking back for a retracement to 154.25-ish, indeed up to 155. It's not impossible to trade right now, but it's about a 1-to-1 when using this bottom. The trade would have been then, for instance, a break above this fractal or this fractal. Personally, I'd rather see this move up, create the gap between price and the moving average, and then hook back to the moving average. Yeah, and we have the news indeed. Thanks, Modris. I always forget about that. But that's something we need to be aware of. That is coming in about 45 minutes from now. So it's better to wait for potential longs after that, because there could be a spike indeed like that. You never know. If the news event, whatever it is, still allows it, then I would look for dips and pullback. Ooh, nice, Beverly. 125 pips. Great job. I think probably this piece, right? Very nice. Now 155 is also minus 618 target. So that I think is the potential for today. But could go further than that, by the way. But my Urian closed indeed for break even. Let's see. And we've had 2, 4. This is already the 6th candle not breaking the top. It's taking a bit too long there. The entry, in my opinion, now it's just going too far. And unless maybe trading to 1 minute, I don't see, for my personal reason, I don't see a entry right here. After the news event, though, if it gives a good pullback, I would like to take the continuation. Alrighty, let's see, because we are getting good breaks. All right. You're odd quickly. Oh. Made a bit stronger pullback yesterday than expected, but they make a rally again now, pulling back. So it doesn't look that great. Pound yen ultimately moved lower before it made the zigzag, so it didn't really make a zigzag, just fell instead of bouncing. Looking pretty momentum to the downside, by the way. Yens could be cautious with those because they could continue with that eventually. Let's take a look at, let me find the dollar yen indeed. Yeah, that too made a break. The yen strength is interesting because this was a potential fifth wave from a wave perspective. I was kind of curious personally if it would not break this level, and it didn't. So there is a chance that this is gaining some traction. There could be some yen strength. So I'll be careful with the trading yen weakness, like we did actually, like I did with the euro yen. But this particular setup, well, it does have a good 4-hour candle. It's not something I would like to really trade now, though, personally. It's already a pretty big bar. No. Here too, I would rather, I don't know, this is already, actually has gone to the zero line. From a 5-minute point of view, it actually could still continue. Let's see. Obviously, a hook back would always be pleasant, but in this case, probably it has enough momentum to follow through. So if someone, I'm not a big fan of this dolly, and just because of the fact that it's a recent break, it's more of a reversal than with the trend setup. I like using 5 minutes more for with the trend. I like the pound and euro a bit more, to be honest, but it's definitely possible the dollar yen too. In that case, This could be probably short right now or a bit higher at 122.70 with a stop loss above this 123.10. We see the yen's falling actually on all of them. Odd yen too, although it's bouncing pretty strong off this 94.50. It went through the 95 actually. Dollar CAD also getting a break after a strong momentum. Personally, I would rather see, what I rather like with the dollar yen is not so interesting because of the fact that when the AO goes back to the retracement, I rather see a bit deeper pullback. This went to the 23.6. I prefer if it goes back to one of these two fibs. Whereas the dollar CAD, let's say, is still falling. You can see that this made a retracement. When we look at the dollar CAD, this is just still in its fall. So, for instance, if this starts to retrace like this, typically when this gets back to the zero line, like the dollar yen has, it would be good to have it at 38.2 or the 50 fib. Not so shallow as 23.6. But despite that, it probably will go. It's just, I'm not a big fan of it. I would rather wait for the euro dollar, dollar CAD, or pound, one of those three. News events, reversals after news. I don't trade news specifically. Very rarely do I actually look at the development at the news. I mean, sometimes yes. If I, out of curiosity, want to see price action, but typically not that often. I guess you could look for chart patterns indeed like inverse head and shoulders. Would make sense to me. Let's see. Relative strength. Which time frames do you compare? The indicator I use 5 and 15 primarily. I don't use the higher time frames that much. I don't know how useful that is. It could be. I just don't use it that often. Mulders had last week, let's see, only winning trades with the dollar and pound. Great job. Excellent. That's an awesome track record. On the news. Good job. Very nice. One of the good reasons to trade with admirals because news events can sometimes not be easy with trade management stuff, as far as I understand. So if you like news events, Modris had good profit last week, and I think Nenet has a webinar on that somewhere on YouTube with Admiral Markets. Any other questions? Oh yeah, the DAX, I think it was S&P, right? Let me switch. I remember that last week I was saying it looked bearish to me. That was on the 3rd of June, around here, and we did get the follow through from 1140 to about 1090. Let's see if we reached maybe a bouncing spot in the meantime. Yeah, we did, minus 272 target. That looks like a potential bounce as we speak. So that's going to be an interesting situation. We have a channel like this and like that, I guess, as well. And it seems like we can have a bit of a breakout, at least to retest at the very minimum 1180. So something like this at the moment. Oh, my drawing tools. Good. Something like this, up, down, up, and a break like that, I think could happen. Let me take a look at the oscillator. Another way of looking at it would be to wait for the third green bar in the 4-hour chart. Break if this 1-hour fractal. These are all reversal trades, but there could be a spot where we get the reversal just because of the target. And from a 4-hour point of view, the next resistance level is all the way up at here. So I think we could maybe see a corrective zigzag at the minimum. Who knows how far it could go. It could be a big break, or it could just be a corrective zigzag, and it could still move lower. We could put a fib from here to here. If it does move lower, what could be likely fibs? In that case, at 50, at 61.8, at 1140, 1150 could be levels, and it could fall again to 1060. All right, so we can see kind of corrective zigzag up to those levels, and then a turn around back to this, and then probably a bounce again. Does that make sense, Beverly? Let me take a look. Is that what you were looking at by any chance as well? I think Beverly was asking that. Yeah, S&P and Dow. See? Pretty heavy support zone here. Could be a bouncing spot too. Doji last week at support completed a zigzag pattern as well at the target. Daily Doji at the target. Can move the fib from here to here now. And it could retrace up to these fibs. So here too, this is actually looking like a bit like an inverse head and shoulders with a neckline here. So this break up to the 38.2 probably, then down, and then probably one more retracement like that. Dow and S&P are between the 100 and 200 AMAs. Okay. I can imagine that is so indeed, because the 100 is probably coming in like that, and the 200 probably like that indeed. Very choppy zone. Let's see, S&P looking like the same thing, to be honest. Yeah, I would say it looks same analysis. This looks to be broken. Yeah. All right, let me go back. So it looks like reversal setups there, potentially. And let's see. There was one more question about the entries. It's possible to trade the fibs by placing a limit order indeed. I only do it if I like the setup, if I think that setup has a high probability. If I think the setup has confluences and higher time frame support, then I would consider that. The other way of doing it is indeed waiting for price action confirmation, for instance 1 or 4 hour candles, and then you just have to keep an eye on those candles as they print, so every hour or every 4 hour. Both are possible. If there's a high probability, a pending is possible. The disadvantage of a pending is that momentum sometimes can carry it away. The advantage is that you don't have to monitor the 1 or 4 hour chart. Let's see. Beverly says it does. Let's see. Was also considering longs, expecting a bounce too, but was interested whether I thought the same. Cool. So let's see. Hopefully it makes a good bounce or break at the moment. Actually, bounce after a break after the bounce. And last but not least, Jen asking about the pound. Let's take a look. I think a correction a smaller correction could happen indeed. Yeah, I hit the minus 618 of a smaller zigzag indeed. So we can move the fib from here to here. And see it probably go back to the 38.2 or 50 fib. Agree. That does seem the most likely at the moment. Or I hope so. That would be, a decent entry spot, I think, depending on the news event. I don't expect it to go below the monthly pivot here, because we have a candle low, we have tops in here, 78.6. But this is all based just on technicals, candlesticks. A news event always has its own psychology, its own momentum, its own drive. And it's kind of like a whole different ball game for that 30 minutes, and then things can revert back to normal. Now that pause in technicals in a way can help the technicals if the news goes our way. In some cases, I have a feeling at least that the news is just a neutral, and in that case, I have a feeling that the technicals, the anticipated direction of the technicals outweigh the neutrality or take over in that case, and you see it then move with the technicals. Unless, of course, there's a clear result, then it will go with that result. But if it's a neutral result, then it might not do anything or eventually move with technicals. But obviously, it's a time period where, as a technical trader, you want to be careful. And if you are a news trader, then you're looking forward to it. Alrighty, folks, I guess that will wrap it up. Don't forget to join Nena's webinar on pivot points tonight. And tomorrow, here, new approach in pivot point trading. And tomorrow, there is a webinar with Nena tonight trading decisions based on naked charts. I thank everyone so much for your comments and questions. Always appreciate it a lot, and highly encourage it. And thanks for that. I hope to see you in the webinar soon. I hope that you have a great trading day, and hope that we get a good pullback and continuation. And otherwise, see you soon. Cheers.